Should I buy in right now? Is it going to keep going higher?
It's a question many investors are thinking about right now as they look at the Mag 7's near instant recovery.
This one has recovered to about 90-ish% of its 52-week high.
But MarketBeat's Gabriel Ossorio Mazzili says a closer look at which specific Mag 7 stocks have really recovered most over the past 2 weeks says a lot about what's happening.
The market is really telling investors right now, we prefer safety. We prefer non-cyclicality and diversification of the business.
Which Mag 7 stocks are the safest choice in this bull run as the market eyes continued volatility ahead? Let's dive in. Gabriel, so great to have you back on the show today. We are diving into the Mag 7 after what has been a really great run for all of these stocks. Let's just talk about what kind of as a group the Mag 7 has been doing the last couple of weeks.
Right, so there's a very, very big narrative when it comes to the Mag 7 stocks. First, they're one of the most crowded trades in the market today, which means a lot of people, a lot of institutions, and a lot of well-known investors are betting on the Mag 7 making new highs down the line. Now, so far, there's a very big technical indicator that just flashed green, right, for these stocks and the S&P 500 as well. So I think that should be the first step where investors should start looking into where the future might be for these names.
Oh, these are names that many people already have in their portfolios. All of last year, they all saw an incredible run up. Some people bought on the dip for some of these stocks, but some were worried that they would fall even lower. I think the big question everyone has about Mag 7 stocks is this rally a sign of more upward momentum, or could we see more downward volatility in the future?
Right now, the camp is about 50-50, which is why I would focus on momentum and relative price to that big dip that we saw during Liberation Day back in April. So technically, right, Wall Street defines a bear market as a 20% or more decline from new highs or recent highs, which is what the S&P 500, the Nasdaq, and the Mag 7 did back during Liberation Day. Now, here's something way more important. From that low, all of these stocks and all the indexes recovered by over 20%, right? So you have a 20% decline and then a 20% recovery from that low, which puts these stocks back into an official bull market. Now, during the highs that we've seen today, not all stocks were treated equally. And as far as growth goes, as far as speculative growth goes, and as far as stability goes, I think there's a major divergence, which might explain some of the calls being made by Goldman Sachs, some of the new positions being made by Ray Dalio, Michael Burry, which could as well explain some of the divergence that we see within the Mag 7 in this recovery.
Now let's dive right into all of these Mag 7 stocks, starting kind of into an individual look at all of them and which ones are the biggest winners right now in this recovery and which ones might still be struggling a little bit. So which is the first Mag 7 stock that you're seeing a lot of positive signs for?
Well, the first one would be Microsoft, and it might not be the strongest recovery. It might not be the most exciting name when it comes to price action. But remember, when the market is this volatile, when the market goes through these 20% drawdowns and then 20% recoveries, and we don't really know what to expect coming next, that relative price action matters the most. And when it comes to Microsoft, this one has recovered to about 90-ish% of its 52-week high. So that bullish momentum, that near recovery to all-time highs, to the 52-week high as of the past 12 months, I think really tells investors a deeper story, right? So you got to think about Microsoft in terms of what the business exposure is when it comes to the tariffs, when it comes to the underlying economic activity, sentiment, and maybe the future itself. So Microsoft is not really exposed to the tariff situation that we have right now. And more than that, Microsoft derives most of its earnings, most of its revenue from subscription. And not only any subscription, all of its products are mostly tied to corporations, to office services, to products like Excel, products like Microsoft Word, PowerPoint, and all the Excel suite or Microsoft 360 suite. And then you have the cloud computing services as well. So these are not products that are too cyclical. These are not products that are going to go up and down in demand with the consumer, mostly with the business cycle. But then again, these aren't manufacturing or exporting companies, right? The Microsoft customers are mostly in the services sector, which aren't really exposed to tariffs, and they're also diversified across an international spectrum. So I think that that recovery in Microsoft, which is the leading one when it comes to relative to 52-week highs, I think it's the market's message saying we prefer safety, we prefer non-cyclicality, we prefer something that is a bit more diversified and away from all the uncertainty and volatility caused by all these trade tariffs today.
And Microsoft also had such a good earnings report and positive signs coming out of earnings. So I think that's also why this stock in particular is doing so well right now. Let's move on to the next Mag 7 stock you want to dive into.
Right. So Microsoft did have a great report, as you say. And here's another stock that might not have such a great report or might have some basic tailwinds coming into it in the coming months, and that is Tesla. So Tesla is part automotive, part tech, software. People don't really know how to value it or treat it. The argument could be made that this stock should be trading as a tech company. Some others suggest that it should trade as a car company. Who's right? Nobody knows. But the market has decided that this stock is on the other end of the Max 7, meaning that while every other stock, Amazon, Apple, Microsoft, Google, even Meta, they all recovered from those 20% drawdowns and are now in an official bull market closing in on 52-week highs. Now, when it comes to Tesla, that is the single one that hasn't recovered from those lows and hasn't even broken up to 80% of its 52-week high. So that means that Tesla is still technically in a bear market. Now, you have to ask the question, as you did with Microsoft, why is Tesla getting a different treatment? Now, this might come because the company's revenues, the company's earnings are more exposed to tariffs, are more exposed to the consumer cycle and the business cycle, as well as oil becoming cheaper. So, therefore, gas prices are more attractive, reducing demand for EVs. Then you have copper, then you have lithium. There's a lot of more components that go into Tesla's bottom line earnings. But I think the main one should be cyclicality, right? So you have Microsoft in one end outperforming all of the Max 7, and then you have Tesla on the other underperforming all of them. So I think that if you boil things down and you cut down the noise, this could be pinpointed to the theme of we prefer safety, we prefer non cyclicality and diversification of the business above something that is maybe more cyclical, maybe more exposed to what's happening in the market today. And that would be where Tesla falls in, which might explain that divergence in price action.
So you talked about the most positive Mag 7 story and maybe the least positive Mag 7 story. Are there any other insights to be gained from the other stocks that are in the Mag 7 and what's happening in their stories right now?
Well, you do have names like Amazon, names like Nvidia, and names like Apple also following in the momentum. Now, if you take a look at the cyclicality of Nvidia, okay, why isn't it trading like Tesla? Well, Nvidia just landed a new deal with the Saudi government, and it's also gotten a 90-day pause on the tariffs, clearing its way for new orders coming out of China, coming out of all the other countries that have these tariffs imposed on them. And you have to remember that Apple and Nvidia are more tied together than people think, because Apple uses Nvidia technology to develop its chips and vice versa, right? So these two names are very tied up. Now, Apple does have more of that cyclicality factor that we went over with Tesla. However, I don't think that this cyclicality in cars is going to be as big in iPhones or computers and personal laptops, right? So I think that the market is really telling investors right now, we do prefer safety, we do prefer non-cyclicality, but we are willing to be flexible when it comes to names like Nvidia, Apple, and Amazon, right? If you do have tariffs coming in into a name like Walmart, into a name like Home Depot, in other consumer names, these are more brick and mortar. They have a broader logistics chain that increases costs. When it comes to Amazon, this is the one name in retail that people are likely not going to drop, even if we do go into a softening economic environment. wages go down, unemployment goes up, everything else softens in the economy, I don't think that Amazon is going to see that much less activity, right? Compared to something else like a Costco, like a Target, like Walmart. So I think that the market is rewarding stocks like Amazon, Apple, and even Nvidia based on this ability to diversify the cycle, diversify the volatility in earnings and revenue. So I think that you can look at the two extremes, Microsoft and Tesla, and have these names in the middle telling you that, okay, we are preferring this stability and predictability. We are not really rewarding the high cyclicality of the automotive sector through Tesla, but we are willing to be flexible in the middle. So if you can pick a winner in the middle that can catch up to the price action in Microsoft, I think you could have a winning portfolio. But always keep in mind that theme that the market is screaming at you. Cyclicality is not being rewarded.
If you share that more cautious approach to the market right now, check out this free report just for our YouTube viewers. It's called Reduce the Risk, and it's all about maximizing your gains on some more low beta stocks. You can scan the QR code right now on your screen or click the link we have in the description of this video to get that free report on marketbeat.com right now and help protect your investments in this market. I think we talked a lot about tariffs here and the impact that those are having or not having on the different Mag 7 stocks. But the tariff story is only paused. It's not necessarily a full solution at this point. Does that mean there's potential for more volatility in the future for these Mag 7 companies?
Well, absolutely. And even Treasury Secretary Scott Bessent mentioned that there could be a Liberation Day 2.0 coming this summer. And as you mentioned, that 90-day pause is not means of a resolution, is not an actual deal. It's just a pause before the two countries can really get together and figure out what the best path to move forward is, right? So essentially, absolutely right. There could be more volatility in the Max 7, but I do think that the market has been positioning itself into the names that are less exposed to these tariffs and the cyclicality in the economic cycle that they can cause. So then again, you look at Microsoft, how does that business get affected by tariffs, right? And even if tariffs have some sort of effect in the services sector or the way that corporations use Microsoft's products or cloud computing products and services, I don't think that is going to be as harsh as the way it could affect something like Tesla, right? So I think that while there could be volatility, while there could be that Liberation Day 2.0 coming this summer, the market has already moved its chips. It has moved capital accordingly to what they believe could happen, pricing in that potential scenario.
Speaking of pricing, let's talk about in points, taking profits, those sorts of things. We all know part of the reason the Mag 7 went down so quickly is that it was one of the easiest places for people to take profits, kind of protect some of their money as they move to cash. Now that the market is moving back up, that these stocks are back towards close to those 52-week highs, is now a time to be buying those stocks? Or is it a time to wait for that next potential dip that might be coming? Any advice for retail investors out there who are trying to figure out when to buy, when to sell in the midst of the potential for volatility?
Well, that is a very deep question that probably haunts everybody that saw that 20% decline and then a massive recovery within a month, right? That's never been seen before. And most people would think, should I buy in right now? Is it going to keep going higher? Or like you said, are we going to get that second dip opportunity? And the answer is nobody really knows, but you can have some indications when it comes to what institutions are doing. And as we've seen in previous interviews and previous videos, we know that institutions are moving into defensive areas like the XLP ETF, which covers the consumer staples sector. We've also seen some movements into bonds, right? So you combine all of the messages that the market is telling you. Microsoft, the leader in Max 7, bonds, seeing more capital flow in, consumer staples, more capital flow in. What is the commonality here? I think that the market is clearly telling investors that we are going to be preferring safety. We're going to be seeing a capital flow outside of cyclicality, outside of potential risk assets that could be affected by the volatility caused by tariffs, and then moving into something that maybe is not as affected. And you can see it in the price performance, the price action in some of the non-cyclical stocks, as well as the capital flows. And valuations are definitely a concern here, as we've seen from that call coming out of Goldman Sachs a couple of weeks ago, quoting that growth in the future versus valuations under this new tariff world are not really being justified. So maybe an adjustment should have to come in. Therefore, you should find some of the areas that the market is rewarding, some of the theses or themes that the market is rewarding. And I think that you can see it in the Max 7, you can see it in the capital flows, like I said. It's all moving towards non cyclicality, stability. That should be the theme for investors moving forward.
Look for those stable stocks. All right. Great advice, Gabriel. Thank you for your time today diving into the Mag 7. Let us know what you think. Are you buying some of these Mag 7 stocks right now? Are you holding off and waiting for the next dip? Or maybe were you one of the ones who was buying when these stocks were down about 20% last month? Let us know what you've done in the comments. Thanks again for watching, everyone. And as always, happy investing.